Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k. I find that anything that you really need to get done during the day needs to happen first thing in the morning, or else it won't happen. Then you just get blocked by the white noise that happens in our day. I mean, it's crazy. The distractions, the other things, the phone calls that come in. I have ADD or whatever anyway, so it's like devices, emails, phones. Wait, what was I doing? I'll bring something downstairs. It should have gone upstairs. By the end of the day, my life is all over the place. If I don't keep it organized, it takes all sorts of other directions it did not mean to go in.
I was going to ask you about that later on, but maybe we should start with that. I was going to ask you about procrastination. Do you procrastinate? Is that something that you struggle with?
I don't think I procrastinate. Yeah. Conversely, I think I am a kick it in the ass kind of person. Everyone's got to stay organized and focused. You have to have a clear and defined set of goals. And without the goals, you're just sort of drifting in outer space. Yeah. So for people that procrastinate, maybe they either don't have their goals clearly defined, or they do and they're afraid of something. There's fear that gets in our way. I will let things drag on in my calendar, my to-do list for a day or two or four more than I had originally intended. But I don't call that procrastinating. I just sort of feel like I will deprioritize one or two things to make sure that I get the more important stuff done. I want to be so much more than what like a normal person would produce in a regular 9-to-5 day. I pack stuff in on my day. My schedule's nuts, and I pound it out so that at the end of the day, I've created all that white space on my calendar. It actually makes me feel good. It's like my dopamine shot. If I procrastinate, I'm not achieving anything. Right. What do I want to sit on my ass for? Not move forward or fail. I'm not going to consciously make the decision to fail. I'm certainly going to try like hell to succeed at everything, and I'll fail at a bunch of stuff along the way, but I'm not going to like set myself up for failure and just say, screw it, I'm not going to go do it, or I'm not going to try, or I'm going to put it off and I'll procrastinate and I'll do it next year, next month. That's not how I roll.
I think there's people that can, if they get off track, beat themselves up and say, oh, well, now I'm off track, now I've lost the plot. And so then they just go off and do whatever they want because they feel like, well, I've failed at keeping this one task done.
If you're off track, you're off track. It's up to you to know that, be self-aware and get your shit together and pull yourself back on track. Yeah. But if by getting off track, you're suggesting that people just say, well, I'm not going to try anymore because I got off track, that's silly. Get your ass back in gear and give it another shot. Perseverance, consistency, repetition, keep going. You know, if it's a priority for you, if it's a goal for you, you'll get it done. Yeah. If it's not, you're in charge of not getting it done. Yeah. You're the CEO of Don't Give a Fuck Incorporated, right? It's up to you.
Supply and demand is a big theme on this show.
Everything, our whole world, our existence.
So, I wanted to ask you, I mean, right now, there's a shipping container shortage.
There's a what container?
Shipping, that's what I said. Yeah, a shipping container shortage.
Yeah.
You sent me a thing about how like lumber prices are up 180% from last year.
They are.
So there's a bunch of supply and demand things in the news every day. But what I really want to ask you is, how does supply and demand manifest in the multifamily real estate industry, and how do you think about that?
Well, we supply apartments for people to live in. Mm-hmm. And depending on the markets we're in, there's either a high demand or an average demand for those apartments that we provide. We're operating in supply-constrained markets. That's the bedrock of where I choose to purchase buildings in.
What are the advantages of that for you?
Advantages? I mean, if someone can put up a new building next to me, a new building on the other side, a new building across the street, a new building behind me, I've got all this new construction going up that's going to be rental housing competing with my little building. It's going to be tough. More competition coming online all the time. I'll take competition in a healthy marketplace, but I'm looking to operate in supply-constrained markets, and you want to be located near certain key elements of your community. I think people are always looking to be part of the community. So the more desirable a community, the more demand there's going to be to live in that community. We're always measuring supply and demand. I mean, you have to in multifamily, in any business, in anything. In life, every day, you're always measuring supply and demand with everything. It could be the supply and demand of time. It could be the supply and demand of people, customers, products, right? We all know how pricing increases as the sell-through occurs and someone's down to their last 10 or 20 widgets. Well, those 10 or 20 widgets are going to go for a higher price potentially because there's no more supply. And in business, you have to be cognizant of it all the time. I don't care what industry you're in. Know your supply and demand metrics and know what creates supply and demand for you. And sometimes you can influence supply and produce more. And sometimes you can even influence demand through marketing, advertising, certain conditions that you can impart upon the marketplace, messaging, communications. N95 masks had like the same demand factor forever, which wasn't that much. And then a pandemic hits. Look what happens to N95 masks. You can't get them. There was no supply, and everybody on the planet wanted 10 of them. In multifamily, we're constantly measuring our vacancies, our existing tenants who have pending renewals, our move-ins, our move-outs. Now, move-ins and move-outs, that relationship is called absorption. So we're looking for more move-ins than more move-outs. That tells us that we have a nice rate of absorption. If we have more vacancies coming online, that means we got more people moving out than are moving in. You need to know that. You need to know how your apartments or your real estate or your product stacks up to the competition so that when it's out there in the marketplace, available for sale, available for rent, you know how it's going to stack up to other listings and other options that the consumer has. At the end of every day in our office, our leasing team sends out an email that tracks all of our vacancies, all of our under renovation offline inventory, all of our renewals that are expiring in March, April, May, June, and we have them all color-coded to indicate renewing, not renewing, thinking about it. Like we have all different color codes going on, so we can look at this report every day. We look at our month-to-month tenancies and manage those. And we look at absorption. We look at the ratio of move-ins to move-outs because that is a key indicator of supply and demand, along with the schedule of new housing starts in our market. Now, in my supply-constrained markets, I don't have a lot of new housing starts. What are new housing starts? New housing starts are permits for new construction for rental housing. So you know that the permit being applied for and approved is the leading indicator of the housing that's coming online in 18 months or 24 months, however long it takes the developer to build out of the ground and complete the building. That's a known thing. We know when that's happening, and we know the density, and we know the amount of inventory that's coming online with new housing starts. In our supply-constrained markets, we have some, we don't have a lot of new housing starts. Why? Because it's a supply-constrained market. There isn't a whole lot of land to build on. When you get to areas that have lots of land and the local municipalities and governments are trying to incentivize development, you'll see way more construction. Austin, Texas, tons of construction. We saw back in the period before '08, tons of construction in Arizona, Nevada, California, places like that where there was an abundance of land. And that's a good thing because we have a supply and demand imbalance right now for housing in our country. There's way more demand than there is available supply. That's why we're seeing existing home purchase markets be so on fire in a lot of these areas right now because there's so much demand for people to accelerate out of their previous housing and into something new and more permanent in a new area, not in a big city, more working from home. They don't need to be so close to transportation or subways. They could be out and have more space, have a home office, have a yard, that kind of stuff. So for me, in my supply-constrained markets, there's not a whole lot of likelihood of new rental housing being built. There's some, but it's not massive. I can manage it, the market can absorb it, and because it's new construction, it doesn't really compete with my segment of the market. My segment of the market is existing assets that I improve, add value to, and bring them from, say, a C-, C+, C+, up to a B+, A- asset. And so I'm not really competing with new Class A construction. That's going to come online at a higher price and appeal to a different income bracket and a different type of renter applicant in the marketplace. Our price point is very midpoint, and we offer the best product at the mid-price range. And so we don't often compete with new construction, which comes online at the higher price point. Increased costs of construction. We talked about how lumber has doubled, how sheetrock has doubled. I mean, all this stuff has increased over the past year because supply chains are impacting the materials markets. So it's more expensive to build. So when that developer brings his building online and starts going to market, those prices are going to be way above what I'm asking for my mid-price product. So it's healthy to have a bunch of different options within a marketplace for the consumer to choose from. I'm always measuring what units we have under renovation that are coming online. So George, it happens every month where we'll have perhaps 10 or 15 move-outs across several buildings in our market. But I also have a new project that's under development, which is being renovated, and units are coming online. So I've got vacancies hitting as a result of people moving out of existing product, but I also have new inventory, vacant inventory hitting the market that's a result of renovations having occurred. Units were previously offline and now they're coming online. So that's a twofold increase in inventory hitting the market all at once. We're constantly looking at that to see perhaps where we want to direct applicants to look at. Maybe we want to lease up the new units that are coming online from having previously been offline, so that we get some traction and absorption in that property while we let some units just compete freely in the marketplace that were previously occupied but the person moved out. Maybe we'll let that linger another couple of weeks to try and shift the demand to certain areas and targets. Supply and demand measurements are also going to give you indications on what you should price at, concessions, incentives that you may want to offer to new applicants in the marketplace. If you're not measuring your supply and demand in multifamily, you're not going to know how to price your asset or what to give to compete with the guy down the road. You know, the guy down the road might be giving a free month. The building next door might be offering a nicer product at the same price. You got to know how to price your stuff. And unless you're measuring your supply and demand metrics all the time, it's just not going to happen. So measure your supply and demand. Know your absorption rates, that's the relationship between move-ins and move-outs. Know the amount of new housing starts coming online in your market. And know your existing tenants who are going to be renewing with you or potentially not, because if they don't renew with you, all that inventory is going to come online at the same time. You could go from not many vacancies to a whole lot of vacancies if you're not tracking your inventory. So you got to measure your supply and demand always.
So obviously you have a team now that kind of goes out, and you said the leasing team kind of provides a report every day.
Every day.
When you're just starting out and you have a smaller team to work with, how do you do that?
Well, if you're a small operator or an owner of single units or single family housing, you're likely going to be less concerned with how to manage your inventory and how to measure and track supply and demand in your market. You're probably way more likely going to be concerned with, oh shit, I just got to get my house rented quickly for the highest price possible. That's your target. For me, I have thousands of units under management, so there's an ability to sort of direct traffic to areas that have the most need and try and address the different segments of the market demand that's hitting us. So if people need a lot of 2-bedrooms, we can send them to a building or buildings that have more 2-bedroom units. If people need studios, there was a time before the pandemic in 2019, the biggest product demand that we had was for studio apartments. People wanted the value of paying less than a 1-bedroom, but they were still living by themselves, maybe sharing it with a partner or boyfriend or girlfriend, but they wanted the value of having a smaller space, and studio apartments would fly off the shelves. We got a studio apartment, it would rent in a day. What you're seeing right now in the larger markets, in the big cities that have a whole lot of supply out there with not a whole lot of demand absorbing that supply, you're seeing property owners warehouse their units. What's warehousing? We see this a lot. New York City's going through it right now. So you've got property owners that are taking available units for rent off market and they're not advertising them. That's called warehousing. Why do they want to do that? Because they think they're going to be better off reducing the supply into the marketplace and showing whoever's out there looking for apartments to rent maybe 2 or 3 or 4 available units as opposed to 20, 30, or 40. I mean, can you imagine going to a building's website or going onto Zillow or Redfin or wherever your site of choice is to see what's available in the rental market, and you see 20 or 30 listings in the same building, I mean, you're going to go for the jugular on that. As a renter, you're going to want concessions above and beyond what you're hearing people are giving. You're going to want rent prices lower than what you're hearing they're going to do. And if you're the property owner, you know that supply and demand govern everything, just like the renter knows supply and demand governs everything. So as the property owner, if you've got 20 or 30 or 40 units available, they're deciding to pull most of them offline and only address the demand that's out there with a few options. Let those options get absorbed, put more units on steadily, consistently. Because property owners who don't have to have things rented in order to cover bills, maybe they've got a low debt to equity ratio, maybe they're just super well capitalized, maybe for whatever reason they're not stressed about money, they'd rather warehouse their unit than to rent it in poor conditions, than to lock in at low rates and have that survive into the future, than to provide concessions and discount rents when the bank might have something to say about it. So instead, they're pulling their units off, they're warehousing their units, and they're going to slowly release their units back onto the market over time. A lot of property owners feel that that's better for them, and it's better for the market, because if there's just a deluge of inventory available for rent, as there's been in New York City, prices are going to be very suppressed, incentives and concessions are going to be very high, and it's a renter's market. Right now, it's a renter's market. Recently, property owners just took 1,600 or 1,700 units off the market and put them back in the warehouse. Last August, there was 6,000 units available, and then in September, they took units offline. That wasn't occurring because people were renting those units. That was occurring because property owners were pulling the units offline. They were warehousing the units. If you're in a market where you're experiencing way less demand and an oversupply, you have to know how to react and what to do. In New York and in other places, they're warehousing units. If you're in a market where there's not enough supply and there's a ton of demand, out in the resort areas, out in the coastal areas, in mountain and recreational areas, there's tons of demand for rental housing, to purchase housing. You can't make the stuff fast enough. And I gotta tell you, George, with anything in life, if you're going to the supermarket, it's supply and demand. If you're going out to a bar to get some drinks, meet friends, and maybe hook up, it's supply and demand. You want to buy an airline ticket, you go on to one of the travel sites to see what pricing is. You know what's going to dictate the pricing?
Supply and demand.
Supply and demand, George. Everything on the planet is supply and demand.
Are there good kind of businesses, or are there good neighbors to have when you're trying to find a good housing market to build in or to buy in or whatnot?
So everybody wants to live in a community that's vibrant and robust, that has great access to transportation, food, grocery shopping, culture, nightlife, bars, entertainment, recreation, outdoor lifestyle, those types of things. So to the extent that you can choose to buy a building that's next to a university or a hospital or a train station. I mean, these are things that we've heard about forever, right? Oh, I own near all the train stations, and oh, I own near hospitals. And I mean, it's a great strategy. You have certainly more demand built into that little block where that building is because the hospital's there than you would have if there was no hospital there. So for sure, it's a good idea to consider owning rental housing next to hospitals and universities and transportation hubs. But George, I really look for a collection of so much more than that. So before I even look to see where the hospital is, I have to know that local and municipal governments are business friendly, that there's not any regulation being imposed upon the housing market. I have to know that it's a supply constrained market. I have to know that there's a good stable of employers and a good prospect for job growth, because that's what drives rental prices, is people having the money to be able to pay rent. So I'm looking for those things first. After I determine an area has those things, I can then look at things like, oh, where's the hot restaurant? Or, oh, where's the great grocery store? Oh, where's the hospital? I'll choose to put up something or buy something near the hospital. I think those are more secondary for me, although I know that for others out there, those considerations are primary, not secondary. For me, they're secondary because I first have to have that business-friendly environment in a supply-constrained market with job growth and a good employer base. Absolutely, those four things need to exist before I spend $1.
I've been following the SPAC thing for
SPACs.
the last year. Yes, SPACs have been...
You and everybody else have been following SPACs.
Well, and it's not so much following, it's just that it's made headlines throughout the last year. And I've avoided talking about it because it isn't really relevant to the real estate necessarily. But
it's a part of our economic world. It's not a trend.
Yeah, totally.
Is that where you're getting at?
Well, yeah, exactly. And what I'm curious about is what are your thoughts?
SPACs have been around. So when I was first getting into business 30 years ago, SPACs were around.
Yeah.
And they weren't as prevalent and as widely used as they are today, but they gained traction over time, like any good idea or good product will. So let's talk about what a SPAC is. SPAC, Special Purpose Acquisition Company. It's a vehicle that allows a company to raise capital more efficiently and quicker than what the typical IPO market process would perhaps otherwise allow for. So back when I was first getting into business 30 years ago, New York City, Wall Street, back then, if you were raising money in a SPAC deal, then you were probably some sort of newbie or chump that perhaps couldn't be successful in raising money in the way more platinum way of the IPO path because you didn't have the money to engage the right people. You didn't have the access. You didn't have the network. You didn't have a great company idea or product, so you probably weren't right for the IPO markets. Any one of those things could have meant that you might have chosen a SPAC 30 years ago. Now, SPACs have evolved to a place where they're very prevalent in the market, they're accessible, it's a faster and more efficient way for capital to flow into companies. These companies are preferring it because why go through all the cost and time and brain damage of IPOs or other methods of raising capital? These SPACs are here, they exist, they're quick, they're efficient. Now, it doesn't mean that money's getting pumped in irresponsibly. It doesn't mean that the proliferation of SPACs is causing irresponsible investing and all this other stuff that I sort of smell it on you, you're going to ask me. So, investors still have to perform their due diligence. They have to vet a deal. They have to vet management, the company, the market, the product, all that stuff. Yeah. And they're going to do that. Yeah. They're just going to deploy capital using a SPAC because it's faster. I mean, sometimes a company is going to be able to bring its product to market more quickly because it got its capital more quickly. That can be a great thing for both the consumer and the company. Yeah. So, SPACs aren't good or bad. It's just another part of our efficient marketplace that allows capital to flow to where it needs to flow to. Yeah. As the common retail investor, how does SPACs impact you? They don't really. Yeah. Maybe you'll have a faster or better shot of owning shares of a SPAC in a public marketplace once the investment has been made and the capital's flowed into that SPAC, and you start reading about it or hearing about it on the chat sites and on the news. We're seeing a lot of that lately, and maybe the common retail investor will have more access to playing in those fields.
Yeah, I think that thing you smell is that there's beginning to be a reputation with SPACs that it's an overly bullish market, and that money's going places where it's more conceptual rather than based on income.
Look, at the end of the day, a SPAC is a vehicle for capital to flow to a company, product, or service that needs it. And if it benefits the marketplace, if it benefits the consumer, most of the time it's a good thing. I say most of the time because, of course, there's these examples of things that just don't work out. But there's so many things in a marketplace that impact pricing and value and success of a deal. Really, the underlying metrics of any investment never change. If it cash flowed yesterday, it's going to perhaps cash flow tomorrow. If it was a great company yesterday, it's likely to be a great company tomorrow. Now, we can pick apart that comment and show examples of companies that were great yesterday that failed tomorrow. You think of Enron, for an example. I'm not talking about Enrons. I'm talking about generally healthy companies that don't have any scandal or
catalyzing event,
any shoe that's going to drop that's going to... So recently, the 10-year Treasury has seen a significant uptick in price. And when that happens, George, money will flow out of certain sectors of the market and into other sectors of the market. So as the Treasury bill prices go up, money's going to come out of, for example, the recently hot tech sector, and it's going to flow into Treasuries and other areas. And people are saying, oh, well, is tech done? Is tech had its time? Is tech a bubble? Is it overinflated? Look at Cathie Wood's and ARK ETFs, right? They were down 14, 18, 20% over the past 4 or 5 weeks. Yeah. Big fucking deal, 4 or 5 weeks. What have they done over the past year and a half?
And then suddenly today, the highest they've ever had. Yeah.
A great idea yesterday is likely a great idea tomorrow. Yeah. So for the companies that ARK was investing in, does a 14% correction or a 20% correction or pullback when it's gone through the roof prior to that, is a little bit of a pullback a bad thing? Does it indicate fear, negativity? Does it indicate risk in the portfolio? More often than not, I don't think that's the case. The companies that, in her case, Cathie Woods is investing in are solid companies that had great positions in their areas 5 weeks ago. Nothing's changed in those 5 weeks except the price of the T-bill. They're still good companies. It just means that people are reallocating capital. They're shifting market positions. Their behavior as investors in the retail marketplace is changing as T-bills change, as consumer sentiment changes. But I'll tell you what, the disruptive technologies that we all thought were disruptive 6 weeks ago are still fucking disruptive now 6 weeks later. Nothing's changed. Stock prices can fluctuate. It doesn't mean your idea is a worse idea when your stock price goes down. So it's important to remember that as we see the investor public behaving differently, as the pendulums start to change and shift direction. It was a very tech-heavy pendulum swing one way for the past year and a half. And now T-bills are up 75 basis points and people are having an anti-tech sentiment. I don't know. I don't see these companies and these ideas going away or becoming bad ideas now that T-bills went up. They perhaps have a little less attractiveness in certain portfolios. There's certain money managers, there's certain pension funds and public entities that had capital in tech that maybe want to pull out and deploy risk elsewhere. That affects securities prices. Don't get confused with market activity in the aggregate with how good a company is and what the micro story is at a particular company or stock or asset.
And that keys into what we've been talking really for the last 3 weeks about is investing for the long term and having a long-term view.
Maybe pullbacks and corrections are opportunities for you to buy more of a good thing at a lower price. That's how I view it. Yeah. If it was a shitty thing before and then the T-bills go up, it's probably still a shitty thing. But if it was a great thing before T-bills went up and then T-bills go up, it's a great thing at a better price. Take advantage of it. This is part of learning how to invest. This is part of taking control. Take control of it. You have access now. There's so much information. There's so much ability for you to be able to make investments. It doesn't have to be a lot of money, but start thinking like an investor. Start thinking like an owner, because investors and owners think like, I don't care what the stock price is doing on a day-to-day basis. I know what my long-term trajectory is. I know what the long-term plan is. This is a safe bet for the long term. That's the difference. Traders aren't investing. They're just concerned with the movements of the prices during a single market period of one day. They don't want to hold positions overnight most of the time. That's trading. That's not investing. Become an owner, become an investor, think like one, and you're going to change your life and you're going to get in the game.
I want to talk to you about data center real estate. That there's rumors that there's kind of a boom coming in 2021.
There's rumors.
Well, I guess rumors in terms of like news. Like I'm seeing that on the news every once in a while.
I am so excited to hear that real estate is the subject of the rumor mill.
Right. Yeah.
That's great.
Yeah. Well, what are your thoughts on kind of data centers? Do you feel like that's taking away from more cash flowing focused real estate?
No. Look. The hot sector, if I can use the word hot, the popular in-demand sectors of real estate right now, multifamily, warehousing, distribution centers, data centers, cold storage. These are things that are experiencing upticks in demand right now. Well, the world's changed. Multifamily, never going away. People need places to live. We've already said how there's a supply-demand imbalance for housing in our country. So multifamily is going to remain strong. You see a lot more entrepreneurs, people that are out of work, that have had career changes, choosing to start businesses. They need places to operate out of. They need warehousing. They need storage. They need basic 4 walls and a ceiling and a roof, vanilla boxes in which to operate out of. Not retail storefronts, but sort of combination work, warehouse, office space, all in one. You see Data centers, look, you've got crypto that's out there. You've got crypto facilities that are just dedicated to holding equipment and powering the equipment that mines crypto. You've got facilities that are just housing servers that need special construction methods and features that have a need for enhanced electrical capacity and HVAC capacity to keep all the equipment cool. I mean, that stuff just doesn't show up in a regular type of industrial building. You need to build that. And so data centers are part of that, and it's our world right now. So sure, data centers are popular. You're typically going to see things like warehousing, cold storage, and data centers get built in areas where there's more supply of land. You're not going to see that come into a supply-constrained inner city, sort of high-demand, low-supply market. But maybe on the fringe or outside of those markets, in the tertiary areas, where there's more suburban space, there's more open space, there's more land to build on. Some of those municipalities might be more favorable to granting approvals.
Virginia, right outside of D.C., is a big area right now.
There you go. You're not going to see data centers pop up in D.C. They're going to pop up outside of D.C. Same thing with New York, same thing with LA, San Francisco, all the major metropolitan areas. Look to the outside of those areas for your opportunities to build and buy the new types of real estate opportunities in warehousing, cold storage, data centers, and combination live, work, office, warehouse, distribution. I mean, that stuff, there's a real need for that stuff.
And this all goes back to supply and demand.
It does. You're going to have more land supply on the outside of these congested areas, and that's where that stuff's going to get built.
If I'm trying to get better at negotiating, what are 3 to 5 tips that you would give to me to get better at negotiating?
So George, in a negotiation, you want to have this stuff going on. Number one, you want to be confident. I can't say it enough. I beat it to death probably, but you got to look right, you got to act right, you got to sound right. Confidence will up your negotiating game infinitely. Number two, you have to smile, keep your eye contact, don't break eye contact. Look them down. Smile so that they're not looking at a stoic piece of concrete. Keep your party engaged with some direct eye contact. Number three, create a win-win, add value. Don't go into a deal or negotiation thinking, how can I kill my adversary? You got to go into it thinking, how can I provide value to my adversary, make them get a win out of it so that I get a win out of it and we all go home high-fiving each other. Create a win-win and you're going to go really far. And you know what? It's going to set the table for the next time you do business with this person because they're going to know what to expect. You're going to have a way easier time getting what you want the second time out of that same party if you deliver and over-deliver a lot of value the first time around.
Love it. 2 short and sweet Zest quests for you. Number 1, what's the most unusual place you've ever fallen asleep?
A Kiss concert in Madison Square Garden.
Was it that bad?
It was I love Kiss, and I saw them a bunch, but it was so loud, and it was amazing to me. I passed right out. I mean, I was close to the stage. It was fucking loud, man. It was so loud. Anybody who's seen a Kiss show, you know how loud that show is. I fell asleep. It was unreal. Like
the volume actually put you, like it knocked you out.
I don't know what my deal was. Maybe I had food coma. Maybe I was, something else. I don't know what my deal was, but I fell asleep in my seat at the Garden at a Kiss show. It amazes me to this date that could even occur because it was so loud. How does your brain even stay awake? I also fell asleep at the filming of a Letterman show.
Really?
Which is funny because anybody who's been there knows that they keep the interior temperature of the theater.
Very cold.
Like 40 degrees. It's freezing just so that you don't fall asleep, so that you have high energy. Yeah. I fell asleep. I don't know what my deal is. I'm not usually like a narcoleptic napper.
Do you remember who the guest was? Or maybe they were...
I don't. It wasn't a matter of boredom. I was like so excited to go. I used to live around the corner from that place. I've been a few times. But I remember the very first time I went, I was really psyched to go. Fell asleep. So there you go. I fell asleep at those 2 spots, and it's a head scratch.
Maybe someday we'll have Gene Simmons on and we'll get his reaction to that experience.
I feel like I owe him an apology. I feel like it was disrespectful on my part.
Last question I have is, what's your most controversial opinion about something mundane? What's a controversial opinion about something
fragrance.
that doesn't matter? Okay.
I am a massive opponent, and I am very easily put off by fragrances and odors, deodorants, perfumes. I don't want to smell you. I want to look at you. I want to talk to you. I want to do all sorts of other things with you. I don't want to smell you. And so if I'm on an airplane or a train and someone pulls out a perfume bottle or cologne bottle and starts spritzing inside a contained environment, I'll lose my shit. Yeah. I'll go nuts.
Has that always been the case?
Always. Yeah. I remember walking down the street in New York by Herald Square one time. There was a street vendor who was selling cloths and shirts and fabrics and fragrances, had incense burning, and he was spraying the sample of the perfume into the air, but he was like spraying here, but he was looking here, and he wasn't really looking where he was spraying, right? First rule of if you're going to shoot anything, you got to have your eyes go to where. So I was walking down the street, and he was looking over here, and he goes like this, and he sprays right as I'm walking by. I get doused with this horrible stuff. I went bananas. I used to take the train from New York City down to the Jersey Shore on Fridays. It was packed, and people would spray stuff. I never get it. On airplanes, please don't.
My wife's the same way because she gets really bad migraines, and so a lot of things can set it off, but scent is definitely one of those things.
It's just gross.
Yeah.
And when people come and visit you or stay at your house, we have guests that stay at some of my homes somewhere, and people want to come and visit or whatever. We always ask them, like, if you don't mind, you got to bring non-fragrance soaps and shampoos and all that stuff, and
no colognes, no dyes.
Oh, it's so bad. It's so bad. And people think that it's good. A job interview, if I smell you and you come in to interview with me and you reek like fucking perfume or cologne, come on. Bad move, bad form, bad move. Don't do it. I promise you it's a bad decision.
It's a good interview tip.
That people seem to not get that they shouldn't be doing that. Yeah. I mean, to me, it's such a thing of the past. And it's funny because fragrances, perfumes have been around since the dawn of time, right? It's how royalty used to... Yeah.
Well, at that time, bathing was not as frequent as it was now. So.
I tell you what, if I smell you, the relationship with me is not going to go very far at all.
Well, that's what I got for today, Peter. Anything else on your end?
No, just make lots of different clips out of this one bit about fragrances and go very far and wide with it, because if I want to do one thing on this earth while I'm alive, it's make people not smell like stuff.
Yeah.
Just don't smell like stuff. Yeah. Don't smell like anything.
I love it.
Smell like nothing.
Yeah. I'm going to go throw out my extensive cologne collection. No.
Smell like nothing. If you want to be successful, smell like nothing.
That should definitely be a bumper sticker that we make.
Oh my gosh.
All right, well, thanks so much, Peter.
Thank you.
I'll see you next week.
Don't smell.
If you like what you just heard, you can subscribe to The Daily Cash Flow on iTunes or wherever you listen to podcasts. And we'd love it if you left us a review. You can follow us on Twitter and Facebook at SiegelCap and on Instagram at Siegel.cap. As always, if you're an accredited investor, go to SiegelCapital.com and take our survey to see if you qualify to take part in one of our apartment building deals. That's SIEGEL Capital.com.